Folks, I believe this one stock has crazy potential in 2026. I think it's going to be an absolute game changer. I think that if you don't watch this video and understand what the stock is now, well, by the end of the year, you're going to be kicking yourself. In today's video, we're going to break down the latest on the market, our top ideas, and then we're going to go on to the main entree, which is this specific stock. I'll present the data, the catalysts, all the receipts, and even lay out my price thesis very cleanly and clearly, and I'll let you be the judge. As always, if you're the one taking the ultimate risk, you've got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. And today's video is brought to you by the New Year sale on the ZipTrader Discord. As a member, you're going to get all of my ideas and research, my price and chart analysis, my daily morning briefings, catalyst calendars, news alerts, my 10+ hour video lesson library, and really you're going to get all of the resources that I believe are essential for 2026. Give us a spin. I think you're going to be very impressed with what we have for you. Okay, let's get to work. So we're going to start with the market context here. So markets have had a very solid start to the year, and historically January does tend to be a strong month for stocks, especially small caps. Why? Well, you get tax loss harvesting in November and December where people dump losers to harvest their losses. Then in January, that fresh capital comes flooding back in. But bigger picture, we've been talking endlessly about many massive tailwinds that are hitting markets this year. Whether you're talking about the trillions upon trillions of dollars worth of money printing that's going to be happening, the dramatically dropping rates, or the massive amount of AI capex, well, there's just a lot to look forward to right now if you're a stock market investor. There's a lot that could be pumping the market higher by the end of the year. We have midterm elections coming up in November 2026, and folks, nothing motivates a president quite like the threat of losing Congress. And this president really needs Congress. President Trump needs wins, he needs the economy booming, and he needs consumers feeling good when they go to the ballot boxes later this year. And so what actions are being taken or have already been taken? Well, for starters, the massive tax refund wave as a result of the big beautiful bill. This is going to be the biggest refund season ever hitting Q1 of 2026, and this is because the government changed the tax rules mid-year. They increased the standard deduction, they changed the taxes on tips, no tax on overtime, SALT cap quadrupled, and a few other things, and this is going to be a lot of money flowing into consumers' pockets. IRS did not update the brackets mid-year, so most employers withheld way more than they should have. And so that means massive refunds that consumers had no idea they're going to get. Number two, forcing mortgage rates down. So the president ordered Fannie/Freddie to buy $200 billion in mortgage bonds to artificially push rates lower. He banned institutional investors from buying single-family homes. There's more housing moves coming at Davos later this year, and he's trying to do the Fed's job without the Fed, but the Fed is going to come in and lower rates further and further throughout the year. And by the time the midterms roll around, rates will be much lower. Number three, tariff exemptions on many things that folks buy. After getting crushed in a lot of off-year elections over prices, well, the president's administration quietly exempted 237 product categories: beef, coffee, fruit, electronics, auto parts. He shelved pasta and furniture tariffs over the holidays as well. More exemptions are coming as November approaches, and a lot of media isn't actually covering these exemptions, but quite frankly, there's a lot of exemptions that are being rolled out, and this is going to help both companies and consumers. Now, number four, installing his own Fed chair. Powell's out in May. Trump's picking between loyalists who will slash rates on command, and he already said publicly, anybody that disagrees with me will never be Fed chairman. It seems like Fed Chair Powell might be facing indictment soon. I don't think markets are going to like this very much. The Fed is supposed to be independent, and this looks like intimidation tactics to get him to print even more money and lower rates even faster. Number five, 10% credit card rate cap. He called and wrote an executive order for rates to drop from 21% to 10%, which would save Americans $100 billion plus a year. That said, when government set price ceilings, you tend to create a lot of shortages, so it's interesting to see how this one's going to be pulled off. But if this does get pulled off somehow without backfiring, well, that's another catalyst for the economy. And then number six, you have potential tariff rebate checks, stimulus payments directly into the economy, direct cash to voters if tariffs survive the courts, of course. Now, the bottom line here is that every single one of these moves is timed to make voters feel richer by November, and whether it actually works or blows up is the big question, but the playbook is clear. Bail out the consumer, juice the economy, win the midterms, and historically midterm years see governments pulling out all the stops. President Trump and the Federal Reserve are going to be printing so much money that your head is going to spin off and assets are going to melt up. And it's so important to understand this because you need to be somebody that's able to protect yourself from this trend and not get destroyed by it. And look, the fact of the matter is that the USD is going to get garbage canned at a much faster rate this year than we've seen probably in many years. And I understand that so many people in 2025 were so scared of a potential crash that year that they stayed cash and locked in a now 12% loss in the US dollar when compared to just the euro alone, which is crazy because the EU also treats its currency like trash. So again, the US dollar lost 12% as compared to another trash currency. For folks that are staying all cash once again this year because of the fear mongers and the bears, we'll respectfully consider that all you're really doing is transferring the purchasing power that you earned from yourself to the government, and then downstream to asset holders. There's endless fearful content on YouTube and throughout the financial media saying that you need to go all cash and that the stock market is a massive fraud bubble, that assets are all gonna dump. Yes, assets have volatility, but in my view, the fear of short-term volatility in the stock market is nothing compared to the long-term guaranteed downtrend of cash. Of course, you always have to have cash on the sidelines for buying power. Of course, you need cash on the sidelines to run your life. But when it comes to money that you don't want to lose all of its value of, you need to consider buying the right assets. And my job is to get you starting to think about the right ideas, and that's why we're fired up here to give these to you. I preached this video after video the last couple of years. And people said, you're fear-mongering over cash. Well, cash continues to get destroyed. Assets continue to go up. There's going to be periods of time where assets take dumpitos. People will say they're going to zero. What will happen? They will get bought up again. Cash will continue its overall downtrend. So something to consider. Now let's look at the chart. So the S&P 500 is holding above its 50-day moving average, which is bullish. We've seen higher lows forming since the December pullback, and that's a textbook uptrending structure. Key resistance is around the all-time highs that we just hit. And if we can break through this with volume, we could see a melt-up scenario as early as this Q1. Support sits around the 200-day moving average. That's your line in the sand. The VIX is relatively subdued, which tells me there's no panic in the market. Money is flowing into risk assets, so the path of least resistance right now is higher. That said, I do continue to believe this is going to be a very volatile year. Why? Well, for starters, margin trading is increasing. Whenever margin increases, swings up and down become way more extreme. Rate cuts will increase margin usage even further. Secondly, black swan event potential is increasing. I think this one's pretty obvious, but with more geopolitical uncertainty and more US government intervention here and around the world, there is more opportunity for rapid changes, uncertainty, and fear-based sell-offs. I think it's going to be a shock to everyone if we don't see a couple black swans this year. And then thirdly, and most importantly, really, history says that even the most green years have had sizable breathing corrections and even crashes. And these are actually not something to be afraid of, as bears would have you think, but these are actually opportunities. Okay, let's get into the latest on our top ideas. We'll start with APLD. So Applied Digital APLD, we screamed, was a buyback on April 24th, 2025 at around $4.53 a share. We made lots and lots of videos on it last year, and it's up around 577% since that April video, much more at highs. Congratulations if you caught this one. I know this was very, very popular with our followers. Now, what is APLD and does it have more upside? So basically, they are the landlords for AI. They build data centers and rent them to companies that need computing power. The value add here is that AI companies have tons of money and chips, but nowhere to plug them in. So APLD locked up 1+ gigawatt of power in North Dakota before anyone else realized electricity was the bottleneck that was coming. So now they're basically selling the shovels in the AI gold rush. The opportunity, well, US data centers need about 76 gigawatts. We only have 15 gigawatts. So that is a massive gap where APLD makes money. And they're building more out in Ellendale and Jamestown where energy is cheap, grid capacity is abundant, and they get 200+ days of natural free cooling annually. They estimate a 100 megawatt customer could save up to $2.7 billion over 30 years compared to traditional data centers. That's a big deal. That's a lot of cost savings there. Now, the opportunity here is you have to understand the US has a massive shortage of power capacity, grid capacity, and overall data center capacity. And if you look at the actual numbers, well, the US had about 25 gigawatts of operating data center capacity in 2024. Projections for what's going to be needed by 2030 is 75 gigawatts to 134 gigawatts, depending on who you ask. Bloomberg NEF says we might need to hit 106 gigawatts by 2035. So that's a 3 to 4x expansion needed in a little under a decade. Grid interconnection queues are some 7+ years out in a lot of regions in the US of A. So companies that already have power locked up, like APLD, are sitting on gold, so to speak. Now, in terms of catalysts and why this is still very much relevant, Polaris Forge 1 data center is ramping right now. Their first 100 megawatt building hit ready for service in Q4 of 2025, and the second 150 megawatt facility is expected mid-2026, and the third 150 megawatt facility in 2027. Campus can expand beyond 1 gigawatt by 2028 to 2030. And then they have Polaris Forge 2. This is a $3 billion, 280 megawatt campus that broke ground September 2025. Initial capacity is coming online in 2026, full capacity early 2027. And then they have a third hyperscaler deal in the works. The company confirmed advanced stage negotiations with another investment-grade hyperscaler for multiple campuses as of December 2025. And they secured a $100 million financing development facility from Macquarie specifically to support these negotiations. They also have a REIT conversion. Long-term goal is to become an AI-focused data center REIT like Digital Realty or Equinix. Now, of course, in order to do this, they need profitability first, so likely 2 to 3, maybe 4 years out, but it is something to look forward to. Now, if you open up our price analysis posted in the ZipTrader Discord, our bull case for APLD is $181, our base case is $115, and our bear case is $31. The scale up through 2031 in the bull case could put data center hosting, cloud services, and HPC hosting at $7 billion in combined revenue, which at a 7x compressed multiple would put it at $49 billion in total market cap and motivate it to that price of $181 in this scenario. Now, base case wise, you're looking at a more compressed multiple, lower revenue, and that would put us at around $115. Now, I'm bullish on this stock. I think we're going to head closer to that bullish case. And I think if they just execute 80 to 90% as good as I think they're going to, well, I'll be very, very happy. This is a scenario where you have a massive rising tide lifting boats, and this is a small boat that could benefit a lot, and it's going to offer a lot of hyperscalers some deals, which actually could cause some spikes to realize a lot more upside faster than expected. However, when you're talking about actually earning a valuation, not just going there and then going back down, but actually earning a valuation, well, you're looking farther out to 2031 based on my price thesis here and the different scenarios I've laid out. So bottom line here, I still think APLD is a buy for 2026, but with eyes wide open, I think that you're not going to see the same performance you saw last year, but there's a lot more upside heading into the coming years for APLD. Okay, next, Micron Technology, ticker symbol MU. If you remember back in April of 2025, we were one of the first people to come out aggressively for MU with $105 strike calls, which were considered ridiculously bullish back then. And those calls had a crazy run, but even since the pictured video where I was talking about how great our MU idea had been, June 5th, 2025, well, even since then, the stock is up around another 224%. Now, I don't say this to brag. Obviously, we've had our losers too, and that's important. I don't want to gloss over that. Just look at rare earth. They're still in a bear market. But when you're talking about some of these AI infrastructure plays, you have to understand that just because something has run massively doesn't mean that it's overvalued or that it's not still a good buy. For me, if a stock is up 100% year over year and their revenue is up 500%, well, it probably means that stock is not a bad buy. You're still getting more revenue per dollar of equity value. And by the same stretch, if a stock is down 20%, it doesn't actually mean that it's cheaper if their revenue or their overall business has declined by 60%. So these are things to consider. And this is one of the reasons why we came out hard for MU even after it ran so much, because you're still getting more value per dollar invested. Never confuse the price of a stock with the company. There's always a difference between the two, and the arbitrage is finding a value gap. So anyways, what is the future for MU and what is the bigger picture here? Well, if you open our Discord price analysis on MU, we are looking at $545 in the bull case scenario, $380 in the base case, and $190 in the bear case by the end of financial year 2031, which means, yes, we have a lot of upside left, but it's not as much as we had last year. It's one that we still see upside in, but it's also one to be cautious of and not go guns blaring and not have the expectation that you're going to continue to see the returns that we've seen over the last year and a half. Next, Palantir PLTR. We've had so many people asking what's the latest on this stock, and of course this is one of our most famous picks of all time, and for years we made videos talking about the long-term bigger picture of the tier of the Palin and why it was such an obvious buy. Even when the stock was down to $7.28, we said, look, this long-term will age to be one of the best buys you've ever made, and we have years and years of dated videos of me saying it's a buy at nearly every single price point. And a lot of times, to be honest with you, we'd make a video presenting the case for it, and then the next day the stock would go down 10%. The Charlie curse, some could say. And people would comment, Charlie, you're a clown. But sometimes the truth is you have to be a short-term clown in order to be a long-term winner. That's just the truth of the matter. The stock price and a company are two completely different things. And again, the value, the arbitrage opportunity is in finding that difference. A lot of people consider volatility to be proof that a stock is bad. It's actually oftentimes the opposite. And the more volatile a great growth stock is, the more alpha you can build on the rest of the market. Remember, alpha means outperformance of the market average, right? So anyways, what's the story on this moving forward, and what are my latest numbers? Well, I just sent out the latest Discord price thesis, and I do believe that Palantir will surpass $1 trillion a share by 2031. That would motivate the stock to a price scenario of $453 a share. In the base case, with more subdued revenue and a lower multiple, you're looking at $292. And at the bear case, where Palantir gets greatly mismanaged, you could see a fall to $142. But overall, if you're looking at the bigger picture for this company, I'm looking at a bull case scenario as being one of the more probable ones, in my opinion. We've made price targets on Palantir for years, and a lot of people said they were too ambitious, and they kept getting blown through again and again and again. My latest price targets are probably my most conservative targets I've made on Palantir, and that's simply because it has realized so much in gains the last couple of years. And if you're doing the math, the upside isn't anywhere near as extreme as it used to be when we were making videos on the stock at $7, at 15, at 20, at 30. However, there's still sizable upside and sizable opportunity for those who are positioning slowly over time. I think that if we do get into a massive bear market some point in the next year or two, that's going to be one of the best opportunities to snap up shares in Palantir. Obviously, you're the master of your own portfolio and you got to make your own decisions, but that's my take on it. Okay, drum roll please. Now it is time for our main entree. So this past Wednesday morning, we posted a big video breaking down the top 5 stocks to buy for January of 2026. And we broke down the biggest themes that are going to take place in 2026. And one of the biggest themes for this year is the energy rush to power AI. And the top stock that we named for that theme and the top stock of that video was Vistra, VST. We said, look, Vistra is going to get more and more deals with hyperscalers, and that's going to be a big catalyst moving forward. And don't you know, just a couple of days later, they announced they had a mega nuclear deal with Meta, which caused a nice 10% or so rally for the stock. But the bigger picture is that hyperscalers, aka mega companies with huge data center demands, are increasingly investing their war chests into securing data center capacity and power sources. And Vistra is one of the most obvious and one of the most proven. So what is the rundown on this stock? Well, you could think of Vistra as the power company for AI. Vistra owns nuclear plants, natural gas generators, solar and battery storage, producing electricity for approximately 5 million customers. They have 41,000 plus megawatts of generation capacity right now, approaching 50,000 megawatts once the Congenrix acquisition they just did is closed. The value add, Vistra has 6,400 plus megawatts of nuclear capacity that runs around the clock. While startups are waiting in 7-year grid interconnection queues, Vistra is already plugged in and generating. They have a big early mover advantage here. They also run an integrated model, both wholesale generation and retail electricity sales through their TXU energy subsidiary, creating a natural hedge against price swings. Now, the opportunity, again, we've said this a few times in the video, but look, Microsoft CEO said it himself. The number one bottleneck for AI isn't chips anymore, it's actually power. Big tech is now locking up electricity years in advance. Meta just signed a 20-year deal with Vistra for 2,609 megawatts from 3 nuclear plants. This is the largest corporate-backed nuclear uprate deal in U.S. history. Very, very important. So let's go through the numbers here. So generation capacity, 41,000 megawatts, approaching 50,000 megawatts post-Congenrix. Nuclear fleet is 6,400 megawatts. Their 2025 adjusted EBITDA is about $5.9 billion. We'll see the final number soon. Their 2026 adjusted EBITDA guidance is $7.2 billion, which is a 20% plus jump. Their forward PE is relatively cheap for the segment, 16 to 22x. In terms of capital returns, you're looking at $300 million in annual dividends plus $1 billion plus in annual buybacks. Now, what about this Meta deal? What's the deal with that? Well, 20-year PPAs covering 2,609 megawatts from Perry Davis Bessie bases and Beaver Valley nuclear plants. Includes 433 megawatts of uprates, the largest nuclear uprates backed by a corporate customer ever. Power delivery begins late 2026, full capacity by end of 2026, uprates through 2034. Bigger picture, if this is all gibberish to you, this deal provides a lot of certainty for Vistra to pursue 20-year license extensions on all 3 plants. Meta is now one of the biggest corporate buyers of nuclear energy in history, and this is a big benefactor. Now, the Congenrix acquisition, which is going on right now, includes a $4.7 billion deal, adding 5,500 megawatts of modern natural gas generation. It's 10 facilities across PJM, ISO-NE, and ERCOT, exactly where data center demand is the hottest right now. This offers a nice boost in terms of free cash flow per share. It follows the $1.9 billion Lotus acquisition in May of 2025. Okay, so let's talk about catalysts. Meta deal revenue ramping late 2026 through 2034. 2024. Congentrix closes in mid-late 2026, which is immediately accretive. Hyperdealer scales likely in my view. Microsoft, Google, and Amazon are all hunting power. PJM capacity prices at federal caps, creating multi-billion-dollar tailwinds, which is beautiful and makes my chops water. License extensions pushing plant operations into the 2050s and 2060s. So there's a lot of upside potential here, and there's a lot to look forward to. And again, most importantly, really, there's a lot of proof of concept already. Now, what about the risks? Well, political scrutiny on data center power deals, high beta. This trades like a growth stock, not a sleepy utility. A lot of people like to buy utility stocks because they don't move much. But the problem is when they don't move much, well, they don't go up that much either a lot of the time. However, when it comes down to this type of AI utility stock, well, it's going to be more high beta. That means that when you have bad environments, when the market goes down 2%, this might go down 10% or 15%. When it goes up 2 to 3%, it might go up 30 to 40%, right? So that is just the case in point that I want to give you there. Bottom line, I would say this is the adult in the room nuclear play. They have actual operating plants. They have actual revenue. They have actual profits. And again, a lot of people say, look, Vistra is a terrible pick because nobody's going to pay a premium for utility. Well, this Meta deal actually proves that they are willing to pay a premium. Meta paid the premium, and it's a massive deal. Hyperscalers are willing to pay such a big premium for the power and the data centers and all that because there's such a big shortage of those things. That's just kind of like how economics work. Now, we've alerted call options on VST that you can check if you're a Discord member, but I'll go ahead and leak one more price analysis for the purposes of this video, just because I want to make sure that you have the full picture here. Of course, if you want all of our price analyses, we'd love to have you in the Discord. But anyways, in the bull case, we see $759 per share by 2031. In the base case, $463. And in the bear case, $279. In each case, you're seeing substantial upside through 2031 based on our calculations here. And we'll update the thesis if more deals come out. I think there's a lot of tailwinds for this stock over the coming year and over the coming years. Anyways, folks, that caps off today's video. Let us know your favorite stocks down below. Make sure to take advantage of that New Year's sale on the ZipTrader Discord, and we'll see you next time.